All right, and we're live. Good afternoon, everyone. This is Roman Shersher, your number one online resource for buying property, with the real estate update today for the 27th of September. Everybody at this point has heard about this great rate cut that happened about a week and a half ago. The Fed came down. We'll be talking about that and the effect on the mortgage rates, and we'll also be talking about August sales today. So excited to discuss that with you guys. Remember, if you like this video, make sure you hit the like button, and it helps me keep creating content just like this. Current projects, we have a property coming to market in Northridge. That should be coming on the market next week. It's a big property. It's 5 bedrooms, about 2,300 square feet. Really great property. Looking forward to putting that on the market, seeing what the action looks like. We got a property coming to market in Jacksonville. It's taken us a long time to fix this property. It had some foundational and some structural issues. We got those all taken care of, and it's going to hit the market. It's a 3-bedroom, 2-bath in the 32211 area, zip code. And we also have another one on a street called Riverside. That'll be coming to market in about 3 weeks. Changing out the roof next week and doing some additional touch-ups, new appliances, and so on. All right. To anyone watching on Instagram, make sure you head over to Facebook or YouTube after this, and so you can check out the links of the data that I'm providing, the content. Remember, I give you the raw data, that very little opinion. If there is, I'll let you know exactly what it is I'm thinking, but I try to give you the raw data as to exactly what's going on, because people hear stuff all the time and they come to me with some of these absurd things that they've heard friends, family talk about what's really happening out there. For example, mortgage rates. So people say, oh, now the rates should be a half a point lower. That's not the case, and I'll discuss that in a minute. But let's go ahead and hit our first point of content. Let's talk about what happened for August in California. Hold on, getting to it. Here you go. All right. August sales. So right now, not right now, but in August, we just got data a week ago on what happened in August. Our sales were up just a little bit, but we're still down 6.3%. Just from last month. So sales continue to decline. And the reason why is that people pulled back in August as they were awaiting the rate cuts. The writing was on the wall based on what Fed Chairman Powell was saying, is that he was going to cut rates. We didn't know whether it was going to be a quarter point or a half a point. It was an aggressive half point drop all at once. And so there was a lot of news about the rate cuts, and so people pulled back. Sales were down 6.3% from just a month ago. We're still up slightly, 0.3%. 2.8%. We're up 2.8% in total quantity of sales from last year, but we're still down from July. So we're very lackluster. But most importantly, we hit a 7-month low in August of sales, and this sales pace has remained below the 300,000 threshold for 23 consecutive months. So 300,000 is kind of the average to a normalized market that California Association of Realtors sees in the state of California. We've been below that for 23 months. We've been suppressed in our sales for 23 months now, almost 2 years straight. Home sales edged up just a little bit in the first 8 months of 2023, about 0.5%, and our median price was essentially flat. So let's take a look at what it means for us here in Los Angeles. So in Los Angeles, as you can see here by this graphic, we had our prices went down just a little bit month over month with 2.6%. We're still up year over year by 4.4%. Last year, our median in LA Metro was 792, and it's now 827. But our sales, as you can see here, went down month over month 5.7%. San Francisco Bay Area was the worst. They went down almost 10%, not 8.3%. month over month as people were awaiting what was happening with the rate cuts. Now, sales year over year, we're still down in LA Metro. We're down 3%, 3.5% as opposed to what was sold last year. In LA County, okay, in Southern California, LA County, here we were essentially flat on the sales year over year, but we were down 3.2% month over month. And we've continued to rise in price. We're 1.2% higher than we were just a month ago on the median sales price, 4.3% higher year over year. Well, how about inventory? What's going on with inventory? Well, inventory is going up. Last year, we were at 17.5 days on market. Now it takes 22 days on market on an average to sell a home. We had 2.4 months of inventory. Now it's at 3.2 months of inventory. That's in California. LA Metro mimics that pretty closely. 2.4 last year. We're now at 3.3 months of inventory. August, we had last year 20 days on market. Now it's 24 days on market. It's taken a little bit longer. Well, that's not a little bit. It's 20% longer to sell homes. All right. In LA City, we're looking at 18 days on market last year. Now it's at 21 days, and our inventory has gone up from 2.4 months to 3.1 months. So we got more inventory on the market. As you can see here, it's over 20% more inventory in the market, and that's why it's taking longer for these homes to sell. All right. Let's move on to the mortgage. Now, what I wanted to discuss here is that I've heard a lot of misinformation. People calling me saying, hey, mortgage rates should be half a point lower than they were just before Powell's rate drop, I should say. That's not the case. So what happens with the mortgage market is usually the cuts are already baked into the rate. The rate has dropped significantly since, let's say here, let's take a look at it. From the all-time high in October 16th of, not the all-time, forgive me, the highest rates that we've seen in the last couple of years, 7.94% was on October 16th of last year. Okay. Now we were back up to 7.24 on April 8th. And since then we've slowly declined because we've been anticipating this drop, and it gets baked into our mortgage rates already. So people said, oh, well, my rate should be significantly lower. That's not the case. So the day before the rate cut was announced, we were at 6.11%. We are now up from that number to 6.21%. Okay. As you can see here, it climbed just 0.2%, 2 bips, they call it, in just today. And so misinformation out there, it's incorrect. The lowest rates that we saw were the day before the rate cuts were announced. Okay. And so what do our rates look like now? A 30-year fix are 6.21%. 15-year fix is 5.58. 30-year jumbo is at 6.41. 30-year FHA is 5.8, and the VA is right there at 5.82. Okay. So the good thing is that these rates are still very close to those long-term lows. They're definitely a little bit higher than they were right before the Fed announcement, but they're lower now. And as the Fed continues to cut, keep watching these rates decline. In fact, if you watch and these rates are declining, it's more of an indication that the Fed will cut, because this is a leading indicator, if you'll notice these rates, as they have been. All right. As we always do, there we go. We end with a quote. Quotes by Shirley Hufstedler. If you play it safe, you've decided that you don't want to grow anymore. Sometimes growth requires risk, and just have to minimize and moderate that risk. All right, everybody, thank you for joining me today. Remember, check out the links in the content on Facebook or YouTube. And if you like this video, please hit the like button, and I'll continue making these videos. This is Roman Shersher, your #1 online resource for buying property. Thank you for joining me today.